Urgent, urgent! I'm seeking 4 answers from MLT's first quarter results. So this has been a very difficult year so far, right? We have the all of a sudden Russia invading Ukraine, and then you have super high inflation that I think everybody can feel, from your eggs to your mortgage loans to transport costs, everything. And then followed by central banks hiking rates like mad. So the Fed is of course raising, and the BOE, everybody is raising rates. So I'm quite anticipating and looking forward to these results to see if I can get some answers to some questions I have. So of course the first one is DPU, right? That's the main thing investors are concerned about. The second thing is about the price book ratio. Because if you following the share price for MLT, it's corrected by quite a lot. So I was wondering if there was some impact on the NAV. That I was looking for an answer to. The third one was the status of the acquisitions. Actually, I haven't been really following the MLT results because I was quite busy. But my impression was that they've been doing a lot of acquisitions over the past few years. So I was curious as to how much they have done actually, and what's going to happen going forward now that you have rates rising. And of course, the final thing is the rate hike by the Fed and the impact. I think this is probably the foremost concern everybody has. So let's go through the presentation. So first one, DPU, hey, it's up 5%. That's quite nice. So it's nice to see that the acquisitions have paid off. I mean, which is kind of expected, I guess, because each acquisition is accretive, right? So it should be accretive. I was surprised that there was this footnote number 4 saying there's some income support, but actually it's just 610k, so it's just marginal. So if you exclude it, it's still 2.2 cents, which is still higher. So that's good. So the NAV remains the same as 1.47. I don't think they did a revaluation, because this is just the first quarter highlights, right? But there wasn't a material drop either. So I was quite surprised that the share price corrected quite a fair bit. So if you look at it from 1 year, the share price actually went to above $2 at one stage, and now it's corrected to like 160 or something. Now around 170. So who knows? So on the price to book basis, the price to book is actually corrected a fair bit, because the NAV didn't change, right? Or the share price went down. So at current price to book ratio, it's probably the lowest that I've seen for quite a while from MLT. The other metrics remain quite constant. Leverage ratio, interest rate weighted, etc. Actually, at current levels, the rates are still just 2.3%, which is actually very low, right, if you think about it. But this rate will probably go up. But we'll talk about it later at the final part of the presentation. So actually, I was quite curious about how much acquisitions they've done for the past 2 years, because my impression was that they actually did a lot, so much that I lost track already. It became a bit of a blur. So this is the June 2022 status. The good thing is that they present the profile the same way, in the same format every year. So I just went back for the past 2 years and I extracted the presentation. I was quite surprised actually by the findings. So this is this year, right? And this was last year, so June 21, right? So you can see the AUM went up from 10 plus to 13, and the bulk actually came from China. So you see last year China was 30, right? And then this year was 43. AUM went up by 20 plus percent, right? It's even more noticeable if you compare it to 2 years ago. So this is 2 years ago at June 2020. So we went from 9 billion to 13 billion, right? So that's what 40 plus percent to 50% jump in AUM, right? So that's really a lot of acquisitions that they did. And I guess you have to praise the manager. They've really taken advantage of the share price rally to do very accretive acquisitions, which are paying off now. So by profile, I think it's again very clear. It's all in China, right? Well, mostly in China. You have 23 2 years ago, and now you have 43, so almost double already. And the rest of it all over the place. But I say this is kind of like a Asia Pacific focus, right? So it's really becoming a very good theme for investors. So this is like a pan-Asia logistics giant, right? So I was quite curious that what's going to happen going forward, because now you have interest rates going up, so the cost of debt is going up, right? And then you have the share price going down. So the share price going down means it's going to be more difficult to fund the acquisitions by issuing shares, right? It's quite nice to see they have some other levers in their portfolio. So this is really impressive, right? They're going to redevelop this 51 Benoit Road, Singapore. So this is what is looking right now, and this is what's going to happen well, apparently by an artist's impression. So they're going to redevelop it, right? And the GFA will go up by 2.3 times. So this is like a redevelopment of a land bank that they have. Right? So right now it's just 6 blocks of industrial facilities, and it's going to become this impressive looking dude, right? It's pretty nice. Total cost will be $200 million. This is also quite interesting. You see, the remaining land lease is 33 years. Which is quite impressive, right? Because if you're gonna buy get a new industrial property from JTC nowadays, I don't think you get more than 30 years, right? Because they have some new rule or something, where the land lease is just 30 years and below. So this is the existing building that they have, right? I think this is part of their legacy portfolio from the past when you have a longer land lease. So even upgrading and redeveloping this property, they still have 33 years left, which is longer than what you have from a new building, right? So this is really interesting. But the completion is in 2025 though, so it's just like 3 years away. So it will take quite a long time for the effects to kick in. But still nice to see though that other than acquisitions, they also have this lever to pull in their portfolio, right? To redevelop some older specs and redevelop it. It's a bit like what the Mapletree Industrial Trust did with their data centers, right? And also what the Ascenders REIT did recently in Science Park, right? So it's quite nice to see this stuff happening. I remember last year they also did something a bit different, which is they bought some adjacent land in Malaysia. So 2 parcels of industrial properties next to the existing Subang 3 and 4. So they're gonna redevelop and amalgamate everything, right? So it's gonna create more land efficiency and create some value here also. So you can see other than acquisitions, you can also do this kind of amalgamation, and then the previous redevelopment, right? So I think even if rates go up a lot and the share price correct, they still have some ways to generate growth and accretion. So well, I think we have to wait and see. So that's the first 3 points. Quite nice that I've gotten some answers. The last point is on, of course, interest rates, which is the most important. And I think they've presented the information really nicely. Well, kind of. So first of all, I think this is the most important. So you can see that of their total debt of 5 billion, 80% are fixed. So that's nice, right? So 20% is unfixed. But out of 20%, 10% is in Japanese yen, right? And I mean 10% is in yen loans. And BOJ doesn't seem to be in a hurry to raise rates anytime soon, right? In fact, BOJ is like the anomaly amongst major central banks. Right? You see the Fed, BOE, ECB, RBA, everybody is raising rates. Even Singapore, right? MES is strengthening the SING. But BOJ seems to be the outlier. They are still happy to keep rates very low. So actually, out of the 20% unfixed, 10% is actually not a big concern. But of course, it comes at a cost. Because if BOJ is not raising rates, you can see the yen is sliding. But out of which they have some hedge going on in place in the yen as well, right? 40% of it is hedged in this foreign denominated stuff. So there's some relief here as well. As to the actual impact, I'm not very sure. But well, on the whole, I think they've managed the rate rise things pretty nicely. So they actually quantify it a little bit. So over here, so 25 basis points of increase results in 0.01 cents per quarter. So it sounds quite marginal actually, like 1% or less than 1%. I wish they got I wish that they put it in sensitivity terms, in terms of percentage, instead of this absolute quantum. but it seems quite marginal, quite well dealt with. I think this slide is damn important. It will bring a lot of relief to investors. And of course, this is the last slide, which shows you the debt maturity profile, and this is where I think things become more difficult because it all depends on what the central banks do in the future, right? So you can see that for their debt maturity, so a lot of it is fixed, right? But then they will disappear gradually, right? So this year 9%, next year 11, then 14, then 18. So the question is, what will central banks do for the interest rates? Will they keep on raising rates all the way for many years? Because if that's gonna happen, then the loan fixed rates will just roll off, and then they have to refi at higher rates, right? And if that happens, then well, I think the world is gonna see a lot of pain. But if the central banks hike and then keep it there, well, then I think it's a more tolerable. Albeit the rates will still be higher and the cost of debt will go higher. Or will it be a case of they raise rates and then they cut rates because now the market is talking about a recession, right? Then they'll be forced to cut rates and whatever. I'm not very sure actually. I have no idea what's gonna happen. But a lot of it depends on inflation, right? If you look at the inflation right now, it's all oil, right? And a lot of it is just Russia versus Ukraine, right? So when exactly will the war end? Will decide a lot on how inflation plays out, and how inflation plays out will then decide how the central bank's actions will play out. So I'm not very sure actually, but I think this is the main thing and main concern that the market will have for the next few months or even years. I don't know. So good luck everybody. So if you like this video, remember to subscribe over here and leave a comment.